Hi there, guys. Welcome to Midweek with Indiacharts. I am Muskan Kapoor and I am joined here with Jay Vora. We're going to discuss how the market looks like and how it has been performing and what we can expect in the future. So, without any further ado, I will start. I'll start with the US market. We got the job data and it looks pretty strong. It's sturdy, but the market sold off. And there are two diverging things. Why is this so?
So right now what is happening is that good news is bad news for the market and bad news is good news for the market. So if you see the jobs data, so I think it had come to around 2,63,000. So by
Hmm.
the way, this time around I have jotted all the numbers so that
Yeah,
I be precise and come up with the facts. Uh,
correct.
so so this time around, 2,63,000 jobs were added, and I think around 2,50,000
Hmm.
was the job data which was expected. So
Hmm.
what this is suggesting that there are many of the US indicators, I mean the leading indicators which are suggesting that things are slowing down, like
Correct.
construction of housing, etc. and all. But somehow this is not getting reflected in the jobs data. In fact,
Hmm.
the unemployment data which had come, that
Hmm.
was also at a very low level, which was around 3.5, and the market expectation was 3.7. Now,
Hmm.
Fed has openly stated that they would like the unemployment number to go up, which would help them to reduce the inflation pressure.
Hmm.
So, people might be wondering how does it help? So, it
Yeah.
is right now because there is a strong job market and everything, and people are getting money, they are willing to spend, and that is
Hmm.
leading to inflation. Okay,
Yeah.
so the moment they try to cut the demand, okay, because right now what is happening is that supposedly supply is this much and
Hmm.
demand is this much.
Correct.
Okay, so they have to attack on this part. Okay, that is when
Hmm.
this will come down, because this is very hard to scale up. The supply side
Correct.
is very
Hmm.
hard to scale up, so they are trying to attack on the demand. So that is where they are trying to raise rates, and given that
Hmm.
you are still seeing a strong data, so they
Hmm.
have reasons to not hike the rates, because
Correct.
in the past three or four Fed meet, there has
Hmm.
been 75 bips, sort of hiking that is going on, and yet it is not affecting the market as yet.
Hmm.
So they will continue to probably do that till the point the market, I mean, all this doesn't break down and it leads to a bad data, or something of that sort.
Hmm.
So that is what is happening right now. And till the time we see such strong numbers on the job data or the
Hmm.
unemployment rate, and in fact tomorrow the CPI data is going to come.
Yeah.
So 8.1% is the expectation. So I think over
Hmm.
there also, if it shoots above the expectation, then market might be in somewhat of panic
Hmm.
mode. And probably all this is something that is going to lead to a hiking cycle that is going to continue by the
Yeah.
Fed. So as long as you don't see all this data cooling off, I think
Hmm.
the Fed is going to hike rates, and if the
Correct.
Fed is going to hike rates, then that is not good for equities in general.
True. Yes, that's correct. I agree. It all rolls up to how they're prioritizing things. If inflation is their main priority, as it looks like it is now, so
Yes.
in that case, it will not. They will not give up so quick. So moving
Correct.
ahead, I wanted to know about Nasdaq and Dow Jones. What are we expecting, and what are they suggesting us in short term, medium term to long term? What does their data suggest?
Yeah. So there has been one change, which we are now witnessing. So I'll just
Hmm.
share the screen and I'll share the
Okay.
thoughts. So if you see the Dow Jones index, okay,
Hmm.
right, yeah. So if you see the Dow Jones index, so over here, what has happened is that this has been a five-wave decline.
Yes.
Okay. This
Hmm.
has been a five-year decline. In fact, the interesting part is that the Nasdaq 100 has broken this low, but the Dow
Hmm.
Jones has not broken this low, and this has
Hmm.
led to the intermarket divergence between the two. But
Hmm.
the broader point, what I'm trying to tell is that this is possibly a five-wave decline that is going to get complete. Now,
Hmm.
whenever there is a five-wave decline and that gets completed, you typically get a counter trend move. Now,
Correct.
how far the counter trend move can go is something you can gauge with the retracement levels. So in this case, if this is the bottom, okay, and we are trying to find out the retracement level, then the 38.2 is something which we will I mean, we should work out for. So that comes to around 30,832. If that is taken out, then we start looking for further retracement level, that is 50%, 61.8%. So in this case, 50% retracement comes to around 31,480 and 32,159. So as of now, I am assuming that this is the bottom, and once I mean this averages get cleared out, that is when you start looking for a deeper retracement. But there are all the evidences to suggest that this pullback, I mean this 5-wave decline, might be getting over. That is because you can see the RMI indicator, which is the proprietary indicator, that is still in buy mode. Okay. And then if you see on the weekly chart, you can spot a clean 5-wave decline over here. Okay. And other than that, the DSI readings, that is the daily sentiment indicator, daily sentiment index, the readings which we publish, which is basically the survey of around, I mean, across the globe.
Correct.
So the managers, they give their opinion, and based on that, the readings come out. So that reading is almost around extreme levels, wherein there are low number of people who are expecting the market to go up. And typically what happens is that when everyone are bearish, market will tend to surprise, and vice versa. So, when you see a 5-wave decline happening and you see a low DSI reading, okay, and you see the momentum indicator still in buy, then you start anticipating that at some point of time you will see a pullback. Okay. So now this people should not confuse with the longer term view. Okay, because I'll show you why. So if you see the longer term picture, okay, this I want people to understand it very carefully. So if I delete all this data, and if I have to show you the medium term to long term chart, so what is happening is that, see, you can see that ever since the rise started after 2008, okay, this is the 40-month exponential average. Okay, this was not being challenged. It was only COVID, wherein we saw a very sharp decline and we saw the break of this. But in the subsequent month, this key average was, I mean, the index crossed above this key average, and then it continued its up move. Now, the significance is that whenever you see this key average getting broken, okay, there will generally be two possibilities. That, see, you get a sideways sort of correction. It could be months and years, okay, and then eventually the index starts going up. Or when you see this and the averages are getting broken, then you can also see a sharp decline. So you can see over here, I don't know how much data I have, but you can see over here. See, in this entire rise, this average was not getting challenged, and the moment it got challenged and it broke, eventually everything became a sell-on rise.
Correct.
Okay, so we are now almost at that point, wherein we have broken, and now there is a serious risk that, either what happens is that we get into a very big sideways sort of consolidation for maybe weeks and months, and then we start moving higher, or there is a possibility that eventually this pullback occurs. Okay, this pullback occurs, and then we see a very sharp decline eventually. Now, why do I say this? Is because I will try to show it with an example. So you can see the chart of ITC. Okay. Now this I'm taking as a monthly chart. Okay. But let me remove the Bollinger Bands. It will make the life easy. Yeah. So you can see over here. See, over here, when this was broken, okay, the stock went into a sideways consolidation phase. So like I
Yes.
said that there are two ways of correction. Either it would be sideways consolidation or it would be a sharp correction.
Correct.
And later on, if you see that this average was held on, and over here there was there was some sort of consolidation that was happening at the key average. And
Yeah.
when it broke down, it just collapsed. And eventually what happened was COVID kicked in.
Yes.
So the point I'm trying to make is that when you are below this average, okay, there are risks of something else going wrong. I mean, it could be any black swan event or something like that. Now, if I show you the Nasdaq 100 chart, that is even more clear, okay? And, people might understand why this average is key. So if I remove the upper Bollinger Band, and yeah, if I do the log chart. So you can see from this point, that is from 2009, this average was not broken.
Correct.
Okay. And now this is getting challenged.
Mm.
So what it essentially means is that probably this entire move was one leg.
Yes.
Okay. And if that is getting complete, then you can imagine that this is almost a 12 or a 13-year run. Okay. So वो correction, 6 महीना 8 महीना उसी में खत्म नहीं होगा. It can also take a while before something meaningful bottom occurs. So you can see over here. So now see over here there are two possibilities. Okay, one is that we get into this sideways mode for a long period of time, or else the other one is that you see a pullback and eventually it keeps going down.
Correct.
So which way will it go is something that we don't know at this point of time, but if we have to go by our Elliott wave counts, okay, and which means that if this, even if in a conservative case we pick thus that this move is getting at least completed, okay, not the entire, then too, you are looking at 61.8%, which is where it is coming right now. And now if the 61.8% level gets breached, which I'll tell you, the level comes to 10,614 on the Nasdaq 100. Okay. So if that gets breached, then there is a serious threat that something might have actually gotten over of this bigger scale. And then if I have to do the retracement of this entire move, okay, so of which we have barely done just 38.2, then what will happen is that like I mentioned earlier, if 38.2% breaks, then 50% retracement comes into play. If 50 breaks, then 61.8 comes into play. So that is how it is going to happen. And right now what is happening is that the Indian indices are not breaking down. Okay, that is the reason people are very complacent and they are ruling all this out. But if you have to see the evidence, I mean, I had shown you the chart of ITC. In fact, I'll show you one more chart, which is there, still fresh on my mind, which is Indian Bank. So, yeah. See, I'll do the monthly chart. Okay. And you can see that in this entire rise, this averages was not broken. Okay. And similar to ITC, what had happened was it was doing a consolidation. But if you focus only on this area, okay, this was an impulse move. Can you see this? 1, 2, 3, 4, and 5. And when you see a 5-wave decline, it tells you that the direction is now probably turning down. And when you see this consolidation happening and then eventually this breaking down, you saw a waterfall sort of decline in the stock. So I'm not telling that, that can happen in Dow Jones, but when, when the indices are trading below the 40 averages, that is where you have to manage your risk very well, because, anything can go wrong at this point of time.
Correct.
So this is how, the US indices are poised. So if you ask me, so in the short term, it looks like that this 5-wave decline is getting completed, and the
Yes.
intermarket divergence, which I was telling you, Nasdaq has broken, but the Dow indices have not broken. So once this is complete, you are probably looking at a pullback initially towards the averages, and if the averages gets broken, then eventually you'll start looking out for the retracement. And once those pullback is done, okay, we would then again start anticipating that the next leg of decline will start playing out. Because what has happened is that this entire move was one leg. Okay. Now it has to cover this much ground on the downside in the next leg.
Correct.
So what might happen is that this might just be the first decline of the next bigger move that is unfolding.
Correct.
So in which we are just trying to fine tune, and we are trying to play, we are just trying to highlight that this could be a possibility that this decline is over and we get a pullback, but eventually the broader count doesn't change, and that still looks bad as of now. So, many people might think that Nasdaq 52-week low pe hai, it has corrected so much, abhi khatam ho gaya, then that might not be the case as yet.
Correct. Yeah, so this is how the US indices look like. Talking about the Indian indices, how is this going to affect in medium or long term to our the Nifty index? How is that going to be affected?
Sure. So over here as well, we have tried to highlight it that over here, unlike US, you cannot see a 5-wave decline over here. You can just see 1, 2, and 3. Okay, many people are trying to count this fall as a 5-wave decline, but I think the models that we follow and the methodology which we follow, we don't think that this is an impulse decline. So what does it mean is that it leaves room for a pullback up to the 61.8% retracement mark. Okay. So in this, how we are counting is basically this is A, B, and C, and this might be a start of a bigger complex correction. And what right now is happening is A, B, and at some point of time, you'll get C. So in fact, this is not an updated chart, but if you update today's data, so there is a green candle, which shows that there is a high probability that a bottom might be in place, at least for now. And now we are heading higher towards the 17,600 mark, which is something we had also highlighted in our Twitter space as well today.
Okay.
So, people who have not seen it, who have not heard it, can surely check it out.
Yes,
and
I'll leave the link below.
Yeah. And see, this is the hourly chart of the Nifty.
Correct.
Okay. So what we are seeing that the decline as A, B, and C. Okay. So now what you're seeing is that this is probably A, this is B. And once we break out of the channel, then you can see a wave, a larger wave C unfolding in wave X. So that can push the Nifty index higher towards the 17,580, 600 sort of mark. Now, what has happened is that Nifty had closed right, at the upper end of this. So obviously we'll need to wait for the breakout. But the interesting part is when you see the Bank Nifty index, that has actually broken this falling trend line. Okay, so this is sort of giving you that lead indication that probably Nifty might also follow suit. And the interesting part over here is that while Nifty had retraced more than 61.8% of the recent rise, Bank Nifty has barely retraced 50%. Okay, and that also tells you that this is relatively stronger than the Nifty at this point of time.
Correct.
And when the largest component of the Nifty index is showing strength, then there is a good chance that eventually it will help Nifty to move higher. So this is how the short-term setup is. But now coming back to the long-term setup, now India, to be very honest, is in a very good spot, okay, as compared to the global indices, because as I had showed you, the US indices had actually broken even this green line. Okay. and we have not even broken the 20-month average, which is very good. Okay. And now what is happening is that we have this cluster of supports around this zone. So if you see the monthly 20-month average, it comes to around 16,660. Okay. If you see the weekly averages, it is coming to around this zone. Okay, which is around this 16,800. So broadly speaking, 16,600 to 800 is a very strong support zone, and which is why we feel that the bulls might want to defend this area. Okay, I mean, this area would not be given up easily given that the prior trend was up. Okay, so there will always be some fight back, and within that fight back, we are anticipating that there might be a minor pullback towards this 17,600 sort of area, and then we start correcting. Because what is happening is that you can see that the weekly RMI is getting into sell. The monthly RMI is already in sell since a long time. So the moment this crucial average is broken on the closing basis, that is the 20-month average is broken on the closing basis, then there can be some serious selling pressure that can occur. So what has happened right now is that India has been immune, and it is not seeing that much correction. But like I showed you the Nasdaq 100 chart, which is already threatening to break down and showing some scary picture to us. So in that case, can India decouple and start instead, and they keep outperforming? I am not too sure, because you have seen what has happened to the Asian indices as well. So see, these are the risks that we see right now. Okay, and until we don't see the global picture also playing out, I mean, wherein you see an extreme pessimism, all the major waves getting completed, till then we'll be very cautious on the Indian indices, and we will wait for some important confirmations, either the break of this trend line, I mean the break of this level, and provided we see an impulse move, because that is very important. For every new run, you have to see an impulse move from the bottom. If it is a corrective move and it breaks the high, then there is a good chance that this eventually tests over here and then it falls. So the more important point is that we break this level and we see an impulse move. Okay, we would want to see something concrete to suggest that the long-term trend might be changing. Okay, but as of now, we feel that it is in a corrective phase, and it can probably decline as well if the key support of 16,600 to 16,800 is broken.
Correct. Makes sense. So we have a short-term view because it's easy to predict, because it's something that's going on in real time. But for long-term, people will have to join us and keep following up every Wednesday or every Saturday with Weekends with Indiacharts, and they might understand how and where the market can lead us. So thank you so much for your time. It was very informative. Thank you. See you.
Thank you.